Welcome back to the channel. It's another day. We are looking at the BDA August 2024 sitting. We are reviewing what was tested, and today we shall be looking at question number 23. Question number 23. So far we have looked at question number 21, we have looked at question number 22, and we have looked at question number 25. So this is our fourth question number 23, which was testing on flexible budget, flexible budget and variance, flexible budget and variance. So I'll read through this question, and before I read through, kindly, if you are new and you have not subscribed, consider subscribing to this channel. So we continue now. Question number 23, I'll read. Polyco Manufacturing Limited produces premium jewelry. The company prepares its budget for the year based on the estimated production and sales of its product. The following budget was prepared for product Malkia for the current month based on the production of 1250. However, due to unexpected demand, the company ended up producing 1,500 units. So below are the budgeted and actual figures. So these are the budgeted for 1250, and these are the actual figures that we had. Additional information: the selling price for product Malkia is 230 per unit. Where necessary, use per unit variable cost derived from the budgeted figures. Polyco Manufacturing Limited has sales contract to deliver 50 units of product Malkia every month. Polyco Manufacturing Limited sales averages 80% of units produced in any month. This percentage is inclusive of the sales contract units. Corporate tax is 30% payable on realized profit. So you are required prepare flexible budget for 1,500 units. Determine the total flexible budget cost for 1,500 units. And at 1,500 units, compare the flexible budgeted cost with the total actual cost. Using a logical function, identify the variance. So identify the variance as either adverse or favorable. Then prepare income statement for manufacturing level of 1,000, 2,000, and 2,500 units of product Malkia. So that is our question. And we shall start by preparing the flexible. We shall start by preparing the flexible budget. So prepare flexible budget for 1,500 units. So remember, flexible we prepared from the original. Normally prepared from the original. So this is our original. This is our original budget. I will copy the original that we had here. This is our original budget, and original was for 1250. So this is original, and can eliminate this total manufacturing. That way, and that way. So that is our original, and now we need to prepare the flexible. Flexible, and just prepare it here. The flexible, flexible budget. So flexible budget. When you're dealing with a flexible budget, we normally deal with what you call the flexing factor. We have what you call the flexing factor. And flexing factor, we normally take the actual units over budgeted units. Actual units over budgeted units. That is our flexing factor. So in our case, our actual units were 1,500. 1,500 were what was actual. The actual production was 1,500. So actual is 1,500. Actual, this is 1,500, and budgeted is 1,250. yeah, budgeted is so actual was 15, the budgeted was 1250. Yeah, 1250. Therefore, our flexing factor will be the actual divided by the budgeted, which will give you 1.2. And remember, when we flex, we only flex what? The variable. We only flex the variable element. The fixed, they are not flexed. The fixed are not flexed. So we shall take this and we multiply by this one, and we shall lock because the flexing factor is a constant, and I will drag that way. I will later change on the one that are fixed. This one will remain 75,000 and this one will remain at 65. They will not change. So the flexible budget will only affect the variable cost. That is the direct material, direct labor, variable manufacturing, and variable sales and distribution, or variable sales and administration. The fixed manufacturing and the fixed selling will not be affected by the variable or the flexing factor, because flexible deals only with variable. Variable, they are the ones that changes with the units produced. They are the ones that changes with the units produced. That was the first part for 4 marks. Part B of our question, they need us to determine the total flexible budget cost for 15. Yeah, the flexible budget cost for 15. You can copy these. Yeah, copy that and copy this. Yeah, copy this. And this one we have 2 of them. Just a minute. I will have to insert a cell here so that it will be able to capture what I want it to. Yeah, that way. Okay. So I just paste the values. So this one is shillings in 1000. So I'll just put that and I'll drag this so that it will pick my values. Yeah, those are the values that we have, and we need the total. Alt equals, so the total should be this 239. Yeah, 239 will be determine the total flexible budget cost. So the total flexible budget cost will be 239. That way. So that will be our answer in that case for part 2 for 2 marks. And for part 3, you are supposed to compare at 15 units, compare the flexible budget cost with the total actual cost using a logical function. Identify the variance as either adverse or favorable. So in this case, I'll again copy this part, and I'll paste it here. I'll copy. So you need the flexible, and so compare the flexible budget cost with the total actual. So I'll copy this. So I'll copy this. Yeah, copy this one and paste it here. So this one. So that is our value that we are having as our flexible. So here we shall have the actual budget. We add it here. This is our actual. So actual. So for the actual, this is the actual budget. Actual budget. So for the actual budget, here shall pick this value that we had, and I'll drag this. Yeah, that way. That is our actual. So at 1500 units, compare the flexible budget cost with the total actual. Using the logical function, identify the variance as either. So remember, this is what was budgeted and this is the actual. So here the variance that we shall have, variance, if I can start with this to get the variance. So this one just minus directly because the actual was lesser, meaning that it was favorable in that case, and I will drag. Yeah, so that way. So the ones that are positive, they are favorable, and the ones that are negative, they are adverse. So here the nature of this variance, the nature of the variance, or adverse or favorable. Okay, yeah, let me just call it the nature of the variance, because that's what they need. Yeah, identify the variances as either favorable or adverse, and we are using a logical function here. When you talk about the logical function, is normally the if. Yeah, you can have the if function, if function, and I will use it directly on these two. Yeah, I can say if the actual, this one is less than, yeah, if this one is less than this, yeah, less than this, I'll put a comma, open the quotes, it will be favorable, favorable, otherwise it will be adverse, otherwise it will be adverse, and I close the bracket. So that is a logical function. Yeah, if the actual is less than the budgeted, then it will give us favorable, but otherwise it will be adverse. Like the first one should be favorable, and I will drag this. Yeah, that way we'll find that this is favorable, this is adverse. So these were now so I will have to change this. Yeah, I'll have to change, and I will have yeah, that way. Here I'll put if again, use if this one equals to this one. If they are equal, this one will be, can give us 0, or yeah, you can have not applicable, NA, not applicable, or 0. Yeah, so it can either give you not applicable, the nature, or it can give you the 0. Otherwise, if it is false, it will be adverse. If it is false, it will be adverse. And here you'll include another bracket. Yeah, that way. And I will enter, and I will now drag. Yeah, so that they are the same, it will give us they are not applicable, or it will give us they are zeros. Yeah, because we don't have variance for the fixed, because they were the same, the fixed were the same. So that is how you are to use a logical function to identify the variances as either favorable or adverse, That was part C. And the last part, part D, you have to prepare income statement for manufacturing levels. You have income statement here for manufacturing level of 1,000, manufacturing level of 2,000, and manufacturing level of 25. Yeah, so that is our question. We just need that. So remember here, we shall start with sales. So these are units. These are units that we are having, the units. So we shall start with sales. And for this one, I think there was a note of the variable cost per unit. Yeah, selling price already, we know our selling price. I can summarize it here. My selling price is 230. 230. Yeah, 230 is my selling price. So the others, you can get them here. The variable cost, they had said that where necessary, use a per unit variable cost derived from the budgeted figures. Yeah, so these were the budgeted figures. The budgeted figures, we need the per unit, the unit cost. Yeah, unit cost of this one, the budgeted. These were actual, but we need the unit cost of the budgeted. Yeah, where necessary, use a per unit variable cost derived from the budgeted figures. And these are the budget for 1250. Yeah, 1250 units. Therefore, this one will be, so remember we are dealing with shillings in thousand. Yeah, shillings in thousand. And when you're dealing with the shillings in thousand, so you can lock that. Then I drag shillings in thousand. So if you are dealing with the shillings in thousand in this case, we shall just divide directly here. This one, and we divide by this 1250, which we will lock as a constant. Yeah, that way. So those are our unit cost, of which we'll find that for the fixed, they normally remain fixed. Yeah, fixed remains fixed. Fixed does not change. Yeah, so in this case, so we start with our sales. We start with sales. Our sales, and there was a note where we are selling 80%. Yeah, Polycom Manufacturing Limited sells averages 80% of the units produced in any month. Yeah, so we are averaging our sales to be 80%, meaning that we are not selling everything. So you multiply by 80%. Even this one will be by 80%, and here also by 80. So this is our target sales. Yeah, what we shall be having as our sales, yeah, that way. Then we have the variable cost. Yeah, variable costs that we have, and the variable costs from this one shall have direct material, followed by direct labor and variable manufacturing, and we have variable sales. Yeah, so those are our variables, the variables that we have. And here we shall take our 1,000, which is a constant. I will lock that, and I will multiply by this, the unit cost that I have. So the first three will be the same. Yeah, that way. Then this other one, take this multiplied by, for the variable this one, by that way. Yeah, so that will be a variable for that. The second one, the same, we shall lock this, and we multiply by this unit cost that we have, which I'll drag. The first three I'll drag. Then this one here, I will multiply the 2,000 multiplied by this variable of 14, and this one we shall take 25, which we shall lock, multiply by your variable cost per unit, drag the first three, then the last one we take 25 and multiply by the variable cost per unit for this one, sales and administration. One thing you'll notice that our sales are, I think I did not multiply by the selling price. Yeah, we have to multiply by the selling price. in each case. You are to multiply by the selling price. Even here, you are to multiply this by 230, and this one you are to multiply by 230. Yeah, that way. And here you can get your contribution, and our contribution, I will take this here, equals to this one. We minus this. Yeah, we minus that to get that as our contribution. I'll use the top border for that, and I can bold my contribution in that case. Then you have the fixed cost. Yeah, the fixed costs in our case, remember the fixed cost remains fixed. Yeah, we take them as per the budgeted. Yeah, as per the budgeted, they don't change. Yeah, fixed costs, they don't change regardless of the what, regardless of the level of activity that we are having. Fixed cost will remain fixed, the ones that were budgeted. So we shall lock this, and I will drag through. It will be a constant under the 3 level. And even this one for the fixed selling 65, which I will lock, and I will drag through that way. We get our profit before tax. Yeah, profit before tax. Profit before tax. Here we shall take this, we minus the 2. We shall have a loss in this case. Yeah, so profit stroke loss. Yeah, profit stroke loss before tax. Then you have our tax. So remember our tax rate was 30% for realized profit. So it was 30%, but where we have realized the profit. So in our case, the first one we shall not have. The first one we shall not have the tax, because we are having a loss here. So our tax will be 0. But for this one, we shall have tax. We multiply by this rate, which I will lock the tax rate, and we have that. So these are net profit. So net profit after tax. Net profit after tax. Yeah, shall take this, and we minus this, and I'll drag this. Yeah, that is our net profit after tax. That's how that question was supposed to be done. How the question was supposed to be done. So remember, prepare income statement for the manufacturing level 1,000, 2,000, 25 units of product Malkia. So that is how the profit was supposed to be done. How it was supposed to be done. And that's all for this particular question. You'll find that it was a question that a student could have taken lesser time, have taken 23 or 24 minutes. Yeah, at least within 25 minutes, someone could have been able. And for me, remember, I'm explaining. So for a student who is not explaining, that means you can be able to do this particular question within less than 20 minutes. Within less than 20 minutes. And when you do it within less than 20 minutes, then you are on the safer side. You are on the safer side, because you'll be able to manage your time. You'll be able to manage your time. So those are the 4 areas. The first one was to prepare the flexible budget. The second one, determine the flexible budget cost. The third one was to find the variance using a logical function. And again, we have to prepare the income statement. Yeah, the income statement. And we have prepared that. So that's all for this particular question. Just remember, the September intake is ongoing. Yeah, is ongoing. Kindly consider enrolling with us so that you can learn with the best. And again, if you are yet to subscribe to this channel, consider subscribing. So thank you for watching and thank you for your time.